Today, wages growth below expectations. Hello again, it's Martin North from Digital Finance Analytics. Welcome to this post covering finance and property news with a distinctively Australian flavour. In the RBA statement on monetary policy, they said that growth in the wages price index, the WPI, is anticipated to pick up to close to 2.5% by the end of 2021, which is marginally above its pre-pandemic growth rate. WPI growth is then forecast to gradually strengthen further as the unemployment rate declines to be 3.25% by mid-2024, and that'll be the fastest pace since 2012. But Australian wage growth missed the RBA's expectation in the December quarter of 2021, according to the data released today by the ABS. The seasonally adjusted wage price index rose 0.7% in December, with an annual growth rate of 2.3%. The ABS said that this quarter saw the rate of annual wage growth continue to rise from the low of 1.4% in the latter part of 2020 to 2.3% in the December quarter 2021. The proportion of pay rises reported over the December quarter was higher than usually seen at this time of year. The implementation of the last phases of award updates and state-based public sector enterprise agreements, on top of a rising number of wage and salary reviews, drove wages up 0.7% over the quarter, they said. Wage pressure continued to build over the December quarter for jobs with specific skills. Private sector wage growth occurred across a broad range of industries as businesses looked to retain experienced staff and to attract new staff. And private sector wages rose 2.4% annually, maintaining the rate of growth recorded in September 2021 quarter. For the second consecutive quarter, public sector wages recorded an increasing rate of annual growth to be 2.1% after a serious low of 1.3% in June 2021. Private sector wages rose 0.7% in December. This quarter saw a greater proportion of award-based wage rises and employers returning to regular December timing for organisation-wide annual wage and salary reviews. Sustained demand, previously visible in isolated pockets, has started to extend across industry groups, resulting in larger increases paid to attract or retain skilled staff. And wages grew 0.7% in the public sector, mostly due to large state government enterprise agreements returning to a regular schedule of pay rises in Queensland and New South Wales after experiencing wage freezes over the last 18 months. This quarter, jobs covered by individual arrangements were driven by a large proportion of wage growth compared to historic December quarters. The contribution of this method of setting pay remains reactive to the labour market conditions, they said, reflecting the return to regular timing for annual wage and salary reviews and expanding demand for skilled workers. Jobs covered by enterprise agreements were mainly influenced by the return of regularly scheduled public sector agreements over the December quarter, following a period of wages freeze. This quarter saw the final phase of award increases paid as scheduled in the 2021 Fair Work Commission's annual wage review. The staggered approach to award rises has spread the contribution from jobs covered by an award over several quarters in the last 2 years. In original terms, the rate of quarterly wage growth differed across industries in December 2021. Quarterly wage growth ranged from 0.3% for the education and training industry to 1.2% for the retail trade industry. The most significant industries to contribute to growth this quarter was health, care and social assistance at 0.6%, retail trade at 1.2%, and public administration and safety industries at 0.7%. Accommodation and food service industries recorded the highest rate of growth through the year at 3.5%, influenced by the payment of 2020 and 2021 Fair Work Commission annual wage increases in March and December quarters of 2021 respectively. Electricity, gas, water and waste service industries recorded the lowest through the year wage growth at 1.3% for the second consecutive quarter. And across the country, Queensland recorded the highest quarterly rate of wages growth at 0.8%, while Victoria, South Australia, Western Australia and the Northern Territories all recorded the slowest rates of growth at 0.5%. Tasmania recorded the highest rate at 3% of annual wage growth, and Western Australia the lowest at 2%. In the lead up to the June 2020 wage price index release, the ABS advised that the method they used to produce season-adjusted estimates would change from the concurrent method to the forward factors method during the COVID-19 period. The forward factors approach is better suited to managing large movements at the end point of series and ensures that these large movements do not have a disproportionate influence on the seasonal factors. Given this disruption to the labour market during the COVID-19 period and the continuing use of the forward factor method to seasonal adjustment, the ABS recently undertook an extensive annual review of its seasonally adjusted wage price index series. The review followed similar reviews that are progressively being undertaken across the ABS Economic Statistics Programme, and the outcome for wage price index was to continue using the forward factors method. Through this process, static forward factors were calculated for the next 4 quarters and implemented in the June 2021 release. The seasonally adjusted wage price index series will continue to use the forward factors method for the foreseeable future, and they're expected to return to using concurrent adjustment when the risk of disruption from COVID-19 becomes sufficiently low. Now, a couple of observations here. The first is that wage price inflation is lower than goods inflation at the moment. In other words, people are going backwards in real terms. Secondly, of course, it's undershot what the RBA was expecting, not by a lot, but by enough to be considerably concerning. And if the growth rate doesn't pick up, we're going to see much slower rates of wage growth than was expected. This in turn, of course, will influence the RBA in terms of when it might lift interest rates. The third point to make is that there is considerable variation both across industries and states, but in fact, a lot of the movements were impacted by government intervention directly or indirectly, and that included recommended uplifts for a whole range of workers, including, of course, those in the retail sector, as well as movements in the public sector. So this is not necessarily an indication that wages momentum is really picking up naturally across the economy. I think we've got to watch for much more significant data ahead before we can say other than wage growth will remain sluggish for quite some time. That, of course, will in turn shape when the RBA might want to lift the interest rates, which they will find will be more difficult, particularly if the Fed and other central banks around the world move rates higher. Watch this space. It's going to get interesting. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.